All right, here we are, Saylor.
Let's do it.
Let's do it.
Michael, thank you for being here with us. We are taking questions from the audience. We'll kick it off. I hear there's about 100 people standing outside, so congratulations to all of you for making it in the room. Next year, we'll find a bigger stage. All right, let's go with the first one. You've mentioned that simply holding Bitcoin is enough, but would you ever consider building something like a Bitcoin bank, or does that go against your philosophy?
That's a good question.
A bank is a regulated, or it's a reserved term in Western civilization. So right now it means a company that takes business or retail deposits. It's regulated. If you're a regulated bank, you might actually be prevented from doing other financial things. So we don't have any plans to be a bank. We're much more enthusiastic about pioneering the world of Bitcoin-backed credit instruments. We want to have, the premier Bitcoin-backed equity and Bitcoin-backed credit, and so it's a set of financial products, but not a bank.
All right, that makes sense. All right, Michael, a lot of people believe in diversification, but you've gone all in on Bitcoin. What gives you such strong conviction in that choice?
Well, Bitcoin's the only...
Are you sitting in more than one chair? Are you using more than one microphone? Gosh, when that happened, I loved that clip.
only digital commodity, and if you're going to be a public company, then you need to be capitalized on a commodity. And Bitcoin is the first commodity in the history of the world that outperforms the S&P index on a consistent basis. So if you are a public company, it's a very simple choice. There's one best asset, and there is no second best asset, right?
Got it.
So, I mean, I'm an aeronautical engineer. I have conviction in Bitcoin like you have conviction in using aluminum to build an airplane. And the reason you use aluminum to build an airplane is because if you use steel, the plane won't fly. So Bitcoin works for a public company because it's higher performance than the S&P, and it's more volatile than the S&P, and it's a commodity, and so you can go to 100% leverage. And every mathematical model you can possibly work through indicates that the right answer is 100% Bitcoin. If you diversify that, all you're doing is bleeding off, diluting the volatility, which devalues the options. When you go from 100 vol to 40 vol, your options market would go from 100 billion to a billion. So you're going to destroy your own options market. And if you dilute the Bitcoin with anything else, you would destroy your performance. And so the first order answer is it makes no sense because the options are destroyed and the equity is destroyed. The second order answer is you can't build a Bitcoin-backed convertible bond or Bitcoin-backed convertible preferred stock or Bitcoin-backed fixed income preferred stock if you're not Bitcoin-backed, right? And so if Berkshire Hathaway, for example, were to buy $100 billion worth of Bitcoin tomorrow, they might have more Bitcoin than us, but they couldn't issue equity and credit instruments that have Bitcoin's performance because they would be diversified. And so at the end of the day, it makes sense for us to be 100% Bitcoin because it gives you the first order best result, and then all of the securities that we build inherit the volatility and the performance of Bitcoin. And we would, in essence, be destroying, we're crippling our own securities and crippling our own performance to diversify.
I love that. I want to go a little bit off script because you said something. You said there is no second best, right? That's a meme that you created. You have a couple of them. It's going up forever, Laura. All your models are destroyed. A couple of my favorites. You guys bought 420 with a zero in between of Bitcoin yesterday. You guys talk about the importance of marketing and memes and memetics in your guys' boardroom. How important is that to what you guys are doing?
I think we live in a world of abundance, and there are more messages and there's more entertainment You can sit and you can watch Magnus Carlsen chess videos, and you can almost watch an infinite number of commentators commenting on the same chess game by Magnus Carlsen if you want to go down that rabbit hole. There's infinite everything, infinite entertainment, infinite message, infinite news, and everybody's overwhelmed and bombarded. And so it's important that if you have a message that you condense it down to something which is very efficient. People don't have time to read 30 pages. They don't have time to read 2 pages. They probably don't have time to read 2 paragraphs, right? If I were to write a book on why Bitcoin is the superior investment asset, 0.1% of the people would read the book in a decade. If I simply said there is no second best,
Amen.
and if I can get like a 3-year-old kid with a beard to say there's no second best, like baby Saylor can get the point across 1,000,000 times as efficiently. And so I think that these are important because you just can't spread the information efficiently enough unless you put it into a viral package.
Just that's such a good framework through which to understand money at the same time. That money is compressing all of this data about all of the activities that have been done in the world, right? What is the actual supply of goods and capital? What is the actual demand? You know, all of these things get compressed into just the market price, and money is the language through which that is communicated. Like, it's very meme-like in that sense, in that it's a data compression technology. And so again, when I said earlier in our past video that Bitcoin's like the ultimate meme, it doesn't just mean that Bitcoin has this very recognizable brand. It's that its functionality as a tool is actually compressing the most possible data.
Yeah.
And its price movements are telling you the truest picture of what people actually want versus what's actually available in the world. Now, it's not, now people aren't pricing things in Bitcoin widely yet. That hasn't been fully adopted in that way.
So that's very forward thinking.
Well, but you can do it today, right? As we said earlier, the housing prices are down. Oh, sorry. Housing prices are down 99% over the past 10 years. I say this in 2025, if you denominate housing prices in Bitcoin.
Yes.
So the tool is available to you. It's always a matter of what frame of reference are you using to evaluate economic activities. So money does have this very deeply, and this is where words get a little tricky, memetic, not mimetic. Like mimetic is like imitating. Memetic is more like this data compression aspect that he's talking about.
Okay.
Yeah.
Interesting.
And Richard Dawkins is the father of that idea. The book, The Selfish Gene, he talked about, you know, what genetics are. That basically we pass our genetic information on to our ancestors. He talked about the cultural version of that, which he called the meme.
Yeah.
But memes only became popular in the age of the internet. So this idea has been around for a while, but it's like, it's cultural genetics, if you will.
Yeah. Well, I will say Saylor's wrong. I know one individual sitting right in front of me that has time to read more than 2 paragraphs every day. Very well read.
It's always a matter of prioritization. But he's right, that all of our attention spans have been fucking debased.
Well, and it's just bombarded with information.
And by the way, like, I carve out time to read books because I just that's something I've been doing for a long time. But I too get sucked into, you know, doom scrolling and all this stuff on this thing for hours at a time sometimes.
Yes.
You know, especially when I'm traveling or I don't have anything else to do, I'm just flipping through Twitter, flipping through Instagram.
Yeah.
And so, I think that's what he's speaking to, right? It does take its toll on your attention span.
Well, not only that, but I mean, I'm very interested in what's happening in the Bitcoin world and beyond. And there's just too much information. I can't keep up with it all. Like many years ago, it was like I could devour all of it, but it's just become so abundant. It's like, you know, you have to pick and choose, and there's a lot out there. We're
all drinking from the fire hose now. And now that everyone is both a producer and a consumer of information, it's like it's exploded exponentially. Like my mom, I always tell the joke that when my mom was a kid, she said we had channel 3, 6, and 9, or was it 3, 9, and 12, whatever it was. They had three channels.
Yeah.
And she goes, and if the president was on, you're fucked, because he'd be on all 3 channels.
That's funny.
So we've gone from that world to like, what he just described, right?
Yes.
The infinite rabbit hole of any niche you want to look into.
Totally.
Yeah.
You got it. Yes, absolutely. A lot of questions came in about MNAV. A lot of people curious about this. So do you think it's possible for MNAV to drop below 1 in a bear market? And if it does,
is it just me, or like, you know, I love that reel that's I saw on Twitter where it's a clip of like 60 seconds of somebody asking him a question, a bunch of different interviewers.
Oh yeah.
It's like he's so brilliant that he's like both bothered, but then at the same time happy that he's answering these questions where it's like, oh, fuck, I got to explain this again.
Who knows what's going on in that cranium?
I don't know, but he definitely brings the heat.
how would that impact your strategy?
Yeah, I think an important point on that is sometimes I see like Twitter analysts saying, oh, this is just like GBTC and Grayscale went below 1 times NAV before. And what they miss is that Grayscale was a trust company, a closed-in trust, and we're an operating company. And a trust company doesn't have the option to refinance or take on leverage or to sell securities, buy securities, recapitalize, or buy their own stock back. And so when you should think of a trust company is, no, I'm gonna pick the wrong metaphor and people will hate me. It's just a form of corporate entity that has no operational flexibility to manage its capital structure. Operating companies have much more flexibility. We can buy stock, sell stock, recapitalize. We can take on debt to fix or to close a gap. So at the end of the day, I think that the one example people have in the crypto market, Grayscale trading below NAV, was because it was a trust, not an operating company. Theoretically, here, when an operating company or a company doing something trades below NAV, it's because the investors have lost faith in the management team and they think the management team is destroying shareholder value by acting irrationally. So for example, if I were to give myself $1 billion a year pay package and announce it, the stock would dive and people would say, what if I just said, hey, I have $64 billion of Bitcoin, I'm gonna pay myself $1 billion a year for the next 64 years. People would lose faith in the company. They would say the management team is looting the shareholders. They dump the stock would trade below NAV. It's because the management team is doing something out of alignment with the interest of the shareholders that the stock would trade below NAV. Now, having said all of that, we constructed the company so that the company can generate yield and generate gains even at NAV or below NAV. For example, we have $64 billion of Bitcoin. If the stock were to trade to $1 tomorrow, well, we wouldn't sell the equity, duh. We would just sell the preferred stock. We would be selling stock over collateralized 10 to 1 against Bitcoin with a 10% yield, and we would generate billions of dollars of gains selling the preferred or the fixed income instrument. At some point, people would say, wow, they're generating gains anyway, and then the value would come back into the equity. Or we would sell, you sell a preferred stock. If someone's stupid enough to short my stock to $1, I would sell $1 billion of the preferred and I would buy back the common stock, right? And I would just recapitalize the company, right? And then the common stock would fly through the roof and then they would be complaining that we bought the thing that they were selling. So operating companies can do this. Trust companies, trust funds, ETFs, they can't do this. A closed-in trust can't do what I described. So the way that I see the world and the way that we see the world is when someone irrationally misprices something, then if it's mispriced too low, we buy it. And if it's priced at a massive premium, we might sell it, not to drive the price down, but just to capture the premium. And we construct all the preferred so that I sell this preferred that people want US dollar yield. I sell this preferred to people that want convertible. I sell this preferred to people that want Japanese.
dude, he's going to have the most valuable company in the world, right? Like if any of these other companies try to come in, like let's say Berkshire Hathaway buys $100 billion worth of Bitcoin, they'll have more Bitcoin, but they don't have the flexibility that he has. And then in them doing so, they're going to drive the price up, and they're going to give him the ability to dilute, sell bonds, whatever, to get more Bitcoin. Like, can anybody catch him?
Well, the one caveat with the Berkshire analogy, he's saying that if they only carved out $100 billion of their cash to buy Bitcoin and they remained diversified, they couldn't execute on this specific 100% Bitcoin strategy that he's employing. Now, the caveat there is, well, what if Buffett wakes up tomorrow? Actually, he's not the guy running it anymore. Whoever, Berkshire's CEO wakes up and says, you know what, we're liquidating it all for Bitcoin and we're going to run this strategy. He'd have a hard time catching up with that.
God, that makes sense.
Yield. I'll sell this thing to someone that might want a euro yield. I will create this for people that want leverage, and ultimately we're creating value. And if one of the securities trades weak, we either stop selling it or we reverse it and start buying it. And if you don't go to business school, then I'll boil it down to one sentence. Here's business school. Keep your options open, right? That's what you learn in business school. And how do you create value? You have to generate option value. So you'd say, well, why do you have that preferred and this preferred, and why do you do this some days and not do it other days? We're generating optionality. The more optionality we generate, the more opportunity we have. The Strife product. One day someone will start to talk about interest rates collapsing. Maybe there'll be someone writing a story about how the Federal Reserve is under pressure to lower interest rates, and SOFR will dive, or the forward interest rate curve will dive, and Strife will trade up. And it has nothing to do with Bitcoin. It has nothing to do with our equity. It has nothing to do with the MNAV. It has to do with people's opinion of whether or not Jerome Powell is going to change his something. And so we're creating optionality into the credit market. Like someone else will say, well, I think the S&P is going to start to provide a credit rating for Bitcoin companies like MSTR. And then the price of those things will readjust, and there'll be a huge surge of demand. And we will, if we have an ATM, when that surge of demand comes, we can sell $10 billion in a week. If we don't have an ATM and that surge of demand comes, we sell nothing in a week, and we talk to some bankers for 4 weeks, and then by the time we do something, the opportunity is lost. So the thing that makes our company a monster is having multiple ATMs in multiple capital markets, all of them correlated to different forecasts, like your forecast of interest rates, your forecast of Bitcoin volatility, your forecast of Bitcoin itself, your forecast of crypto policy. All of those futures are changing all the time. We're straddling that future, and we're able to either buy or sell or hedge any of them in real time, 1 million, 10 million, 100 million, or 1 billion, right? And sometimes you do nothing for you could do nothing for a month or 2 months, and then you could do $2 billion in 2 hours, right? So, and maybe you'll do something, consistently, but we built the business to straddle the crypto economy and the traditional finance economy, and to monetize volatility, and we're pretty thoughtful about how we do it. So, and this is the joke.
I said this earlier, I don't know if it was our last video or this one, but that Saylor had said something to the effect that there's only a certain throughput at which a profound idea can spread across the minds of men in the world. That's why Bitcoin had not caught on more broadly yet. I think you could interpret the entirety of Bitcoin strategy as an arbitrage of that situation, right? He's plugging into every credit market in the world, basically enacting Gresham's law. So he's selling the weak money, which is any fucking credit instrument you can think of, basically, using it to acquire the hard money and hoard it, which then adds to the volatility of a stock, which then increases market capitalization, which then lets him issue even more of that into more markets at higher volumes and more options. And he just wash, rinse, repeat.
Creates a feedback loop.
And
there's a flywheel effect too. The bigger it is, the faster it goes.
Of course. Now, as long as you manage all of that intelligently, which that comes down to the terms of the debt itself, right? Is it mark to market? What is the frequency? When, what are the liquidation clauses? Blah, 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 which, as I've heard him talk about before, they're pretty smart on all of that, thinking about what debt not to take on. But I guess the point I was really driving at is that it is just, you've arrived at an idea. 99.9% of the world has not yet arrived at that idea. And it is this disruption of gold and everything else that's built on top of gold as money, which is what Bitcoin is doing.
Yeah.
And so then you are now selling all of these credit you call them whatever you want. Basically, it's inferior money, inferior assets to Bitcoin. You're selling that to everyone that hasn't caught up to you intellectually. Yeah. And then using those proceeds, basically leveraging their own balance sheet when they buy your stuff to buy Bitcoin.
Yes.
And so it becomes like an access pipeline to every market in the world. And then he's putting all the bells and whistles on it with the optionality and the different yields and different this and that and, preferred conversions and all that. And it's a strategy that I think it is basically the same reason why Bitcoin eats the world. It goes back to Gresham's law, which Gresham's law basically says bad money drives good money out of circulation. So when they used to clip coins and they would issue, a coin that said this is 1 gram of gold, but it had been debased and it was actually 0.9 grams of gold.
Yeah.
Well, people would spend the inferior money that had the same face value but lower actual metallic quantity, and they would hoard the 100% full coin. So in that way, the bad money drives the good money out of circulation. So he's basically issuing quote unquote bad money to hoard the good money.
And offering all these products to people who are unaware of that or don't have access to the underlying asset.
Well, it's people that are, whether they don't have access to it, can't buy it due to some clause or mandate inside of their endowment or whatever the thing may be. Or they're just ignorant of it, right? There's a lot of people that don't know anything about strategy or Bitcoin, but they saw that the stock price is up 100x in the past 5 years. Let me buy some of their preferreds.
Yeah.
And so that's the arbitrage that, as I interpret it, how it's been played out.
What risk do you see?
Well, it's all the debt risk. All the debt risk, right? How do you manage all of that? So I don't know. I'm sure they have a very sophisticated framework for managing the debt, right? And if Bitcoin were to draw down to some crazy number and stay there for a long time, what would they do? I'm sure they have contingency plans in place, but that is the risk. It is still debt. You can still get liquidated. And going back in time, he doesn't talk about this much, but there was a point. He shared this with me. I think he was like, I don't know if this still holds, but at one point he had lost more money in one day than any other human in the history of the world. And around the .com crash, I think he lost billions in a day. His stock price was down 90-something% basically overnight. Yeah. And I don't know, I haven't fully investigated the story, but he was sharing that he thought he still held that title. I don't know if that's still the case, but
really?
he's been to this rodeo. You know? And so that would lend me to believe that he has done extreme diligence. Yeah. When you've been through that much pain, you've probably learned a lot through the process, and he's probably taking every imaginable precaution to prevent that from happening again.
He's clearly, he's brilliant. I love listening to him. The lengths that he goes to, and his ability to explain things, the examples that he pulls out. It's just so readily available. His thought process is clearly very deep.
Yeah.
If you're a closed-end trust and you trade below NAV, that's death. If you're an operating company and we trade below NAV, we just get to monetize that. That's good for me. right? I mean, arguably, the more irrational the market it is, the better it is. If you were to short our stock down to 10% of NAV, we would make billions and billions of dollars a day, right? And so we have a very anti-fragile structure, and I think we're pretty optimistic about the prospects there, because I'm quite sure the market will stay volatile.
Yeah. Okay. All right, cool. Well, let's keep going. We our clock is out, but hey, can I get another like 12 minutes? I think we're running a little early. We want to get through some more questions. As long as that's good with everybody here, we'll keep rolling. All right, cool. All right, Michael, do you see Bitcoin starting as a store of value and eventually becoming a global currency like other forms of money have?
Ooh, that's a good one.
I think if you read the history of the Rothschilds, the greatest bankers of the 19th century, they had a network. The Rothschild banks were the network. The primary capital asset that traded was sovereign debt. They were trading UK debt and French debt and German debt, par value 100, and they moved those instruments, bearer bonds, around very rapidly. And that's how the entire banking network worked in the 19th century. And then when they did cash settlement, you know what cash settlement meant? Cash settlement for the Rothschilds in the 19th century. But I bring this up because Bitcoin's a peer-to-peer cash system, right? And all these people, like, they're always tweeting at me like, you don't understand what peer-to-peer cash is, okay? When the Rothschilds cash settled a bearer bond transaction in the 19th century, that meant they traded the bonds for gold bullion or gold coin. And so cash meant gold. It meant metallic money, either in bullion form or in coin form. But even then, gold was...
He's absolutely correct about this. Like, the word cash comes from casse. It's a French word, means money box. It's a literal box where you kept metallic money. So it's always been an instrument of final settlement, not deferred settlement, not paper. Like, it's been bastardized. Paper has never been cash. Never was cash.
Do you know when we started calling paper currency cash?
I don't know.
Yeah.
But this is the origin of cash. That's why Bitcoin is cash. Because it is an instrument of final settlement, right? There's no liability attached to it. When I send you Bitcoin on chain, I've slid a gold coin across the table. There's no liability. There's no authority that's authorizing it. It's a free market valued bearer asset.
Which further enforces the layered money thesis and the small blocks and using Lightning or, I don't know, derivatives on top of Bitcoin. Because then you're going to do final cash settlement. So this idea that Roger Ver is like, oh, this needed to be, medium of exchange on the main chain globally. He's kind of missing the point.
Well, the whole thing is based on an ill-conceived conception of the word cash. Cash is not the paper that you buy your coffee with. Cash originally, now I'm not saying everyone in the world would disagree with me, but he is actually correct. This is where the term originates. And it's very important to understand that, because you have to understand final settlement. Right? We think, most people think, if I hand you a $100 bill, we're done, right? I paid you, we're good. You still have a liability attached to that dollar bill, right? You go stick that $100 bill under your mattress for 10 years, watch your purchasing power go down. Right? That's that liability being expressed into your purchasing power. Right? Now, if I slide you a gold coin, no one's going to debase that any faster than we know it's been debased over 5,000 years, which is roughly 2% a year. So you should see your purchasing power remain stable or slightly go up. That's because gold is cash, paper is not. So Bitcoin, gold, physical, cash, paper, not.
I did not know that.
Too slow and too cumbersome to settle very frequently. And so there was a fiat currency, these bonds, trading over the cash system, and the gold standard all through the century. And I think it's important because if you look at Bitcoin today, Bitcoin's digital gold, it's digital cash. What does it mean? It's a bearer instrument, a monetary instrument. What do I think is going to happen? I think it's going to keep growing from $1 trillion to 10 trillion to 100 trillion. It's going to keep getting bigger and bigger in the capital stack. And I think other forms of money, fiat currencies, will continue. You're going to have sovereign debt, corporate debt, other type municipal debt. As long as you have cities, they'll issue debt. As long as you have countries, they'll issue debt. As long as you have companies, they'll issue debt. As long as you have families and they want to buy a house, they'll issue debt, mortgage-backed debt. You're going to have all these forms of credit when people cash settle. The settlement network will be Bitcoin. Was the world built on a gold standard in the 19th century? Yeah.
So you only have debt in a Keynesian economic model. What you need an inflationary currency on top of the underlying asset to have debt. Otherwise, the debt gets more expensive over time in like a true Austrian economic model or on a hard money standard.
Yeah, you're disincentivized from borrowing sound money because the purchasing power of sound money goes up over a year, which means if you borrowed gold and the value of gold is going up every year, then the debt load, the real debt burden on you as the borrower is going up every year.
Yes.
Fiat currency is the inversion of that. Right. The money is depreciating over time, so everyone is incentivized to borrow.
What he's saying only applies with a debasing fiat currency.
Well, it's not to say that there won't be debt on a sound money standard, but it would most likely only be commercial debt, where people are borrowing to execute a specific project that's expected to deliver a return that is over the appreciation expected from holding sound money, basically. So we'd go from, and this is of course just my own estimate, global debt to GDP today is like 350%. Right? Like 350% of global debt, or is 350% larger than global revenue, which is GDP output, right? That's bonkers. It should probably be like 1/10 of that or less. Like global debt to GDP. Global debt would be like 30% of GDP, maybe. You know, I don't know what the right number is for commercial credit, but it would be way, way, way less than what we see in the fiat paradigm.
Okay, got it.
Gold, but what circulated? Sovereign debt. Will the world be on a Bitcoin standard in the 21st?
And just one other point, this, yes, sovereign debt was the main thing that was traded historically, but that's because governments have always been the biggest business. Monopoly on violence and all of the tax revenues, that makes them the biggest business in the world. Is that going to be the case in a Bitcoinized future where it's impossible to inflate currencies and it's very hard to tax people and people have a lot of authority to vote with their feet and take their purchasing power with them? I think government shrinks a lot. I don't think sovereign debt will be the premier asset class in a Bitcoinized world.
Century,
that makes sense.
Yes. What will circulate? Every form of credit of every credit-worthy counterparty, and then on top of that, equity, layers of equity from public company, private equity, and you'll have all sorts of other collectibles. I don't see a world where that disappears. I don't see a world where it needs to disappear. And so I see a world where there are many types of assets, but the king apex asset, the root asset, which everything else is settled on or everything else is oriented to, the center of gravity of the financial universe of the 21st century emerging is Bitcoin. Just like, that falls toward the center of gravity, which is the middle of the earth, and none of you have been there. That doesn't mean that it doesn't control everybody, right? Everything will be oriented in a frame of reference.
Singularity.
Yeah.
All right.
Talk about a mic drop.
I know. Well, I love when he brings the heat and then he just gets back into his kind of like mildly uncomfortable with the posture.
Back to the autism.
Yeah.
AI could 10x global GDP, and we know some of the value will flow into Bitcoin. So if GDP grows that much, does that massively increase Bitcoin's terminal value in your view?
In classical economics, they talk about the economy being driven by land, labor, and capital. The consequences of AI is digital intelligence, Bitcoin is digital capital. The consequences of the AI is that the AI is going to do the work of 1 billion people, then 10 billion people, then 100 billion people, then 1 trillion people. Then that AI will go into robots, and the robots will do the manual labor of 1 billion people, and then 10 billion people. And then it will go into your cars and your appliances and everything. And so what's happening? We're going to digitally transform labor, and the demand for labor as we know it is going to change, fall. The robots don't need as much space as we need, and the AIs don't need any space. So the demand for land as an input to the economy will fall by a factor of 10. The demand for labor as an input to the economy will fall by a factor of 100. What's left? Capital. Capital's going to explode. You know, you're going to have massively valuable companies that a million robots creating a million.
I gotta say, this is an area where I strongly disagree, because actually capital and the traditional economic framework he's using, capital includes goods that are useful for creating other goods. So money is actually a distinct class from that. Now, it's not to say that you couldn't make an argument that money is kind of like a meta capital. Like, we use money to make forms of capital, we use capital to make forms of goods. Like, okay, there's an argument to be made there, but just for point of clarification from the Austrian school, they would not classify money as capital. So he's great at speaking in metaphors and all these things, but like, just to be precise, I feel like.
Does it seem like, from your perspective, he's looking at Bitcoin as an asset more than a currency? I mean, he kind of literally said that.
Of course.
Yeah.
Of course. But I think he's also just simplifying things for the audience. It's easier to just say, speak in threes, rather than adding this other anomaly over here called money that's all confusing, and you can build whole podcasts around how confusing it is.
Right.
So, but I felt compelled to put that point of clarification there.
Robots with like 22 employees that are worth trillions of dollars, don't need the land, don't need the labor, have the money. Where's the capital going to flow? It's going to flow into the Bitcoin, right? I mean, if you create...
So yeah, he's using, I think, the term capital as like purchasing power. Like, where's all the
economic energy.
Economic energy. Where's all the value going to flow in this new paradigm, which I do agree with.
Yeah.
The more we automate away all of these drudgeries and we increase human productivity, all of that unlocked purchasing power, what he's calling capital or economic energy, will flow into sound money.
Yes. And those productivity gains that AI and robotics and all these things allow us are going to be reflected in increase in purchasing power into Bitcoin, because we're increasing all of this stuff here while we're not increasing this. So this thing's convertibility into all these goods or services is going to increase at a faster and faster rate.
That's exactly right. So again, it's waking up from the Keynesian hypnosis of prices need to go up. It's like, no, the purpose of markets is to drive prices down.
Yes.
Right? The price is a social appraisal of the cost necessary to solve a problem.
Yes.
We want to solve more problems better, faster, cheaper, and introduce things that solve problems we couldn't solve before, right?
Yeah.
Like flying from New York to London was a problem no one could solve for thousands of years until we invented the 747 or whatever airplane to do that. So yes, all of that additional problem solving potential, which we're calling purchasing power or capital or economic energy, flows into the hardest asset, which is Bitcoin.
And so as this plays out, do you think current governmental regimes and people that make all that up are going to be pushing for UBI? I mean, what are we going to do for the people that don't have Bitcoin while they're watching their jobs get taken away? Things are getting more expensive because we have this fiat monetary system that, as we're pushing prices down, they continue to need to debase at a faster rate to prop asset prices up, because the assets are collateralizing the debt.
Yeah, I mean, we really don't know, right?
Yeah.
You've got the collision of two titanic forces, which is the exponential productivity gains of technological advancement colliding with the exponential debasement of fiat currency that's trying to erode the real debt burden of its client, which is central government.
Yeah.
And how is that going to play out? Like, I think it exposes the bankruptcy of governments, and it also drives their revenues down. That's why I think, again, the sovereign individual, Bitcoin makes government local again, something like that. Government and politics stop being such a predominant feature of our lives and our identities. And I mean, talk about waking up from an illusion. Like, the idea that we can pass laws or have popularity contests for people to tell us what to do and that's going to improve the world, that's the biggest fucking delusion of them all. And so I hope Bitcoin just awakens us from that.
Yeah. Yeah, I'm with you there.
But extreme wealth, right? There's going to be two types of people. There's going to be the people that bought the Bitcoin, and they're going to be privately wealthy, and they're going to live off of that, or something that is denominated in Bitcoin, right? And then there's going to be everybody that's getting wealth redistributed to them by political systems. There won't be a lack of stuff. There'll be infinite stuff It'll be redistributed in a political economic process, which will be interesting. But the consequences of AI is that it's going to create massive amount of capital, and the capital that you're going to want is digital capital, because it's the best capital and it's the most useful capital. When the AI thinks 1,000,000 times a second and trades with another AI 1,000,000 times a second, they're going to trade with Bitcoin. They're going to trade with digital capital 1,000,000 and 1,000,000,000 times faster. They're definitely not swapping buildings. They're definitely not swapping gold bonds, bars, or coins. They're definitely not going to trust anybody else's sovereign credit. They're not going to trust private credit, public credit, sovereign debt. They're not going to use cash. They're going to use pure digital capital in cyberspace. So it's all.
I like this too as the new Turing test. You know, the old Turing test was at what point it was thought that if you could interact with an artificial intelligence and not be able to tell whether or not you're dealing with a human or not on the other side of the screen, that was the Turing test. And then if the AI passed that test, then it would be sentient AGI. Well, we already have that today. We have ChatGPT and just, all the LLMs that are basically that. It's hard to tell if you're dealing with a human or not. I actually like this idea as Bitcoin being the real Turing test, that if a sentient AI actually ever woke up, if it did anything other than stack sats, then it would be a retarded fucking AI. And like, if this thing is actually sentient and actually intelligent, then it would be accumulating sound money, obviously, to serve whatever ends it may have.
Yeah. And any of these AIs, if you have AIs that are working in the States versus some that are working in other jurisdictions, they have to use a non-sovereign instrument because you have the corruption element, right?
Well, I mean, I think even to his point, he's like, they're going to be smart enough not to trust some counterparty that can debase them or issue more bonds or issue more fiat currencies. Like, why would I fucking take that risk?
Yeah.
I'm an artificial intelligence. I'm smart. Let me use the money where I don't have to trust anyone. Right? That's what I'm saying. That would be an actual useful Turing test, I think.
That's interesting. I dig that.
Bullish for Bitcoin, and it's going to drive the price of Bitcoin up. And if you haven't figured out how to make money by putting AI into your business, that's hard. Then I give you the easy answer. You just buy the Bitcoin as much as you can buy, because we know where all the money is going to eventually go. The capital is all going to flow in the Bitcoin network, and the more everything else grows, the more Bitcoin is going to grow. So you could just go right there and then wait for the world to enrich you.
All right. Very, very bullish. Okay, I think we have time for one more. By the way, this is all stream of consciousness. There was no prep. Michael didn't get these questions ahead of time. People are texting them in. So thank you for participating. So Michael, we started this initiative last year. Accelerating corporate Bitcoin adoption is the mission. This person asked a great question. Prescott, is there a point where one entity holding too much Bitcoin creates negative effects on the network or reduces its utility?
No, I think the network is, the protocol is protected by the distribution of the mining, the distribution of the protocol itself, the distribution of the nodes, the distribution of the holders, the distribution of the exchanges, and the distribution of the derivatives, and the distribution of the regulatory bodies on top of it. That's a global phenomenon. One company, if BlackRock holds 3% or 2% of the Bitcoin, or if Strategy holds 2 or 3 or 4 or 5% of the Bitcoin, it doesn't matter, because the price of Bitcoin went from 10,000 to 100,000 while we were pursuing that 2%. And that meant that while we pursued that, by the way, technically, if you go to Saylor Tracker, you will find that all of the work that we've done to get to 2.5% resulted in like a $23 billion gain for us, $23 billion. But it resulted in a $2.2 trillion gain for everybody else. Okay, so it's not like I got the money, right? What is the ratio of $2 trillion? Someone else has $2 trillion, and we made 20 billion, and we have this small little piece. So it's like when Wall Street is 5% of Bitcoin, that means 95% of the 2.5 trillion is not Wall Street. When Wall Street is 10% of Bitcoin, Bitcoin will be at $1 million a coin, and that means there'll be nearly $20 trillion of not Wall Street money that will be sitting everywhere else in
really
the rest
point.
of the world, in the rest of whatever, right? The energy, it's impossible for anybody to take over Bitcoin in a hostile way, because the more aggressively you buy Bitcoin, the more you empower everybody else that disagrees with you. You see? Like, the harder I go, the more powerful everybody who took a different point of view becomes. And so I refer to it as a perfect machine composed of imperfect components. And yeah, everybody, the world's full of people that hold Bitcoin or have Bitcoin in a country you don't like, in a method you don't like, doing things you don't.
The perfect machine composed of imperfect components. I'm pretty sure he's referring to us as those components. And he's also correct. I've said that Bitcoin, this is one of those unity of opposites things.
Yes.
That Bitcoin is the agreement of the disagreeable. Like it is money for enemies, as has been said. Like people are holding the thing out of their own self-interest, but in holding the thing, you're also contributing purchasing power, capital, economic energy, whatever term you want to use, to the network.
Yes.
Right? And there's a multiplicative effect where you buy $1 of Bitcoin, that tends to be more than $1 in market cap growth.
Yeah.
So that's what he's describing here.
Yeah, and isn't it the only thing that you can hoard that's ethical to do so? Is there any other examples of that?
There's a terminological thing here between hoarding and saving. It's like, well, what's the difference between hoarding and saving, right? Like, oh, you've got 100,000 in the bank. Is that saving or is that hoarding? I don't like the term hoarding whatsoever, because it implies that by holding a reserve of money, you're somehow hurting someone. The reality is the exact opposite. If I go out into the world and assuming I acquired that money ethically, right? I rendered someone a useful good or service and I obtained that money through a consensual trade.
Yeah.
That means I've added to the productive output of goods and services in the world. I've been paid in money that I'm hoarding or saving. That's just economic potential energy I have not exercised to consume any goods or services. So what have I done? I've improved the number of goods and services in the world and deferred my own consumption, which is reflected in my savings.
Yes.
There is no such thing as hoarding. There's no such thing as hoarding. It's not idle capital. It's not idle money. It's not like it's just sitting there doing nothing. It's like, I already fucking did something to earn that money.
Yeah.
I'm sitting on this stacks
Uh-huh.
of potential, economic potential energy, which is the Saylor term. Purchasing power is the technical term. That I can then use to go out and acquire goods and services in the future. It gives me the widest set of options available. But I'm not hurting anyone in doing it. I'm actually improving everyone's life by saving money.
Yeah. Well, I think of hoarding houses. You got a 100-house real estate portfolio. That's hoarding because you're holding on to something that you're saving as a monetary instrument that other people need for its utility value. So maybe it's that negative connotation why that term gets thrown around a lot.
True.
I mean, if you're pulling as much Bitcoin out of the circulating supply as possible, you're strengthening the value of the ones that are trading.
You're increasing the purchasing power of all the units that are left.
Yes.
You're creating more reservation demand for Bitcoin, which puts upward pressure on its price, which is a reflection of its growth and purchasing power. But I really don't like the word hoarding at all, because I just don't think, even in a crazy example, right? Like pandemic COVID times, people were hoarding toilet paper. You know, like, oh, this guy's got all the toilet paper and we don't have any. Like, fucking break into his house and take his toilet paper. Like, no, that's bullshit. The market price is designed to resolve that peaceably. So when the price of toilet paper goes through the roof, the guy hoarding it has a huge incentive to sell it into the marketplace.
Or producers.
Or producers that can make toilet paper or make a substitute for toilet paper, whatever that is. They are incentivized to get to work and resolve that. So hoarding is a bullshit fucking term in economics. I think just completely get rid of it.
You know, when that happened with the toilet paper, I started getting on my Instagram feed all these ads for bidets.
There you go.
Another solution.
Producers.
Yes.
Exactly. They're incentivized
The
to sell
ingenuity of the
substitutes.
free market.
Yes.
Yeah.
Exactly.
Let's see if we can find where we were here.
Okay, so like, it's not like I got the money, right? What is the ratio of $2 trillion, whatever, right? The energy, it's impossible for anybody to take over Bitcoin in a hostile way, Because the more aggressively you buy Bitcoin, the more you empower everybody else that disagrees with you. You see? Like
so
the
good.
harder I go, the more powerful everybody who took a different point of view becomes.
It's this great
And-
equalizing force.
And so I refer to it as a perfect machine composed of imperfect components. And yeah, everybody, the world's full of people that hold Bitcoin or have Bitcoin in a country you don't like, in a method you don't like, doing things you don't like, but they're empowering you. And the harder they go, the more they empower you. And so what happens is, like, what would happen if Berkshire Hathaway decided they're going to buy $100 billion of Bitcoin tomorrow to all the rest of us, right? It's not hurting you. It's helping you. What happens if they do the opposite, right? And so I think Bitcoin is a classic anti-fragile network, and it's getting more stable. It's getting more conservative. It's getting more indestructible, more anti-fragile, the more that it is embraced by any entity, whether you agree with their values or not. They're all just strengthening the network against whoever is the next attacker.
All around excellent points. He keeps using the term anti-fragile, obviously Taleb's term. Also, in addition to all the things that he said, yes, plus, this is the mind-blowing thing about Bitcoin. The more you attack it, the more you denigrate it, the more you try to refuse it, the more, like, the meme is still in your mouth. And the more you try to fork it, Block Size Wars of 2017, well, it survives the fork and it becomes stronger. So, like, everything is somehow good for Bitcoin, which is, like, fucking mind-blowing on every level.
Bitcoin.
No matter how you attack it or how you love it or whatever you do in between,
Yeah.
it just improves.
It's so crazy.
And it sounds completely crazy, but study anti-fragility, and I think Bitcoin is the most perfect anti-fragile construct we have ever had.
Word to that.
No.
Amazing. All right. Well, we are running out of time here, so we're going to wrap it up. Michael, thank you so much for being here with us. Thank you for your leadership. Give Michael a warm up.
Thank you for your support.
God, you know, he just goes on and on and on. He just never stops. I met him in Madeira. He was in this. He's in this group of people. It's this VIP party, and he's talking to this one group, and it's just, oh, the money's toxic, and he's the same fucking guy as he is on stage or he is on a podcast. He turns around and he's just talking to another group of people. It's really pretty impressive.
Well, it was so funny because obviously met him through Bitcoin Twitter. We did the podcast together. We spoke on the phone once before we did the Saylor series. Then he just completely crushed the Saylor series. I was like, oh, I think this is going to be a big hit as we're recording it.
Yeah.
And then, you know, I've been invited to dinner in his home a few times. I got to know some of his friends.
Yeah.
And it was so funny. I think it was his buddy Eric Weiss. He's like, you know, I've known Saylor for 25 years or whatever it was. He's like, you know, been doing dinner all over the world. And he's like, goes, every night at dinner with Saylor is like the Saylor series. Like the guy just goes down these crazy esoteric rabbit holes. He knows so much about engineering and history and economics. And like, he's just a fucking prodigy of brilliance.
Yes.
And spending time with him is always like that. Like, just like he is on stage, he's rattling off all of this crazy, interesting information, giving you unique and original perspectives.
Yeah, and his metaphors and analogies
Metaphors
are
and analogies,
good.
but then in so many different domains. You know, it's like and then crossing the domains, you know?
Yeah.
And so I think that's where he's really resonated with Bitcoiners, is the weaving in the engineering and energy metaphors into understanding Bitcoin was something that was like sorely lacking prior to his entry. A lot of it was about time and information and strict economics, but he brought in this whole engineering angle on things. It's been very fruitful for helping people grok Bitcoin.
Yeah, Giga Chad. Well, I enjoyed that.
One of the best compliments I ever receive is when people are like, you know what, man? I think you're the second best Bitcoin explainer there is, next to Saylor. And I'm like,
that's a big one. Yes. Yeah. I mean, the Saylor series, I have admittedly listened to it, the entire series, and on 1X, by the way, that ADD brain that we're going to all, you know, succumb to. every time I've had 4 or 5 times, and I get more and more out of it each time.
Yeah, it's been amazing. I wish we had the audio and video better dialed in, but it's the content is top notch.
Yes, it is. And how did that happen? Did he reach out to you and ask you to
so
do that?
he just DM'd me out of the blue and said, hey, thanks for your work. We think it's brilliant. At the time, I was just writing and tweeting about Bitcoin.
Yeah.
Published a few things. And then he sends me a link to an article that MicroStrategy had purchased $250 million in Bitcoin.
Yeah.
I seriously thought it was a scammer. Like, I was like, oh, what is this bullshit? Like, no, you didn't buy 250 million in Bitcoin. And I clicked the link. I was like, oh, it's a real news article. It's a real guy. And I look at his X profile, Twitter profile at the time. I was like, oh, this is like a real human. And then I was thinking about starting a podcast at the time.
How many followers did he have? Do you have any idea at the time?
He was
like
in
4 million or 3 million
he was
now?
in the millions. He's probably in like the 1 to 2 maybe. Like he was in the millions, I'm pretty sure. So like all of these things gave me the information that it was serious. Like, oh, it's a real news article. Oh, this guy's actually got millions of followers. I'd never heard of him before this. And then we have one phone call. I'm like, yeah, I'm thinking about doing this podcast. I'm going to talk super long form, just give the ideas as much room as they need to breathe.
Yep.
And he's like, yeah, sounds good. I sent him an outline for what I planned on talking about via email. He responds to my email like less than an hour later with this fucking, I thought he copied and pasted a table of contents from a book or something. Like
Really?
It was so perfect and like long, I don't know, 3-4 pages. I don't know. I'd have to look it up. And turns out he just wrote that like in an hour.
Wild.
He said he just sat down and fucking typed it up. And then we went on and basically hit record and the rest is history.
Didn't you record some of it and he wanted to do it again?
I'm not supposed to talk about that part, but
okay.
The second round we recorded. So the first round we did 2 days back to back.
Yeah.
It was like, not back to back. Was it 2? I think it was 2 days back to back. It was like Saturday, Sunday. We did like 5 hours, 6 hours. Those were the first 9 episodes. It may have been consecutive weekends. I can't recall. Then we did episodes 10 through 17. Later, we just recorded in little chunks.
Mm-hmm.
And we did all that. And then at some point he calls me. He's like, you know what? That wasn't good enough. We're going to do it again. I was like, let's fucking do it again.
Awesome.
So we ran back through it again.
Yeah. And here you are now.
Yeah.
Sure worked
and thank you, Michael Saylor, for like putting the podcast on the map and like giving me such a lot of shine and a big launch. And it's been an amazing journey. I feel so honored to be going down the Bitcoin rabbit hole in public and hopefully helping people along the way.
Same here. The Saylor series hit and I panic sold everything else that I possibly could and put all of it into Bitcoin. Like borderline sweating bullets. Like, oh my God, I got to get rid of all this other stuff immediately, dude. Yeah. So thank you to you and Saylor for your efforts on that one. That was fantastic. Sure. Yep.
All right. What do we got to do? Plug something at the end?
Where can we find you guise online?
Whatismoneypodcast.com.
Like and subscribe.
Like and subscribe.
BreedLove22 at Instagram.
BreedLove_22 at Instagram. BreedLove22 on X.
Eric V Stacks on X. Eric V Stacks on Instagram.
Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money, and be sure to subscribe to this channel to stay connected.